Hi everyone, it's Angie with Ability Bookkeeping and Business Solutions. Today in this video we're going to be going over the balance sheet, which is one of the three primary financial reports that you'll see as a business owner. The balance sheet is a snapshot in time rather. It's ran as of a specific date, and the balance sheet shows you the accounting equation: assets equals liabilities plus equity. Assets are simply what your company owns, liabilities are what your company owes to others, and equity, think of it as what's left over. We'll go into each of these three in detail so it'll help you understand. So right now I'm in QuickBooks Online Sample Company, and I'm going to go to Reports. Then I'm going to click on Balance Sheet. I have it marked here as a favorite, but if you ever need to find it, you can go down here to the For My Accountant section and click on Balance Sheet. So once I click on this, I will want to select the date periods that I want to run. I'm going to run this through the last day of last month. And then I'm going to display only the totals. I'm not going to break it down by quarters or months or any of that good stuff. I am going to eliminate non-zero rows and columns just to clean up the account a little bit. And I'm not going to select it to another or compare it to another period, but I could if I wanted to. And I'm going to run this in accrual. Click Run Report. And then we get the balance sheet as of September 30th, 2020. The assets are the first thing listed, and they're listed in order of liquidity. So your first assets are going to be your cash accounts, such as your checking and your savings. You're also going to have accounts receivable under current assets. That is money that is due to your company from outstanding invoices from your customers. Then we jump down to other current assets. This is going to include things such as your inventory and your undeposited funds. Undeposited funds are funds that you have received from your customers, but they have not been deposited into the bank yet. The next section is fixed assets. These are going to be longer term assets such as cars and vehicles, land, buildings, leases, that type of things. Also under here you would normally see a contra asset account for depreciation or amortization. Here in the sample company they don't have that set up, but normally you would see that here. You could also have accounts under assets such as goodwill or intangible assets. So jumping down, the next section is liabilities. Here you're going to have your accounts payable, which is money that you owe to your vendors. And if you have AP set up, you're going to see this here. Next is going to be credit cards. So all of your different credit card accounts will be listed here. These are liabilities that you owe to another company. You're also going to have other current liabilities. These are things that are due within this accounting period or this accounting year, within 12 months. This is typically your sales tax payable, wages payable, short-term portion of long-term debt that is payable. Next, you're going to have long-term liabilities, which is your notes payable that will not be paid within 12 months. Any other longer term, most of the time it's just notes payable. So that's liabilities. Next is equity. Here in this example, you're going to see that there is an amount here, an opening balance equity. There absolutely should not be a balance in opening balance equity. If you do have that, I would suggest getting with a bookkeeper or an accountant to realize or to find out why you have that and to correct the problem. Retained earnings is going to be the accumulation of all previous income or loss from previous years. This is a new company in the sample file, so there's nothing in retained earnings yet. It automatically rolls once a year. Net income is the amount of income or loss that's pulled from your income statement, aka profit and loss, through the time period that you specified on your report. So up here, I ran it from January 1st through 9/30/2020. So this is showing you that you have an income of this amount. Now remember, the accounting equation is assets equals liabilities plus equity. So up here under total assets, you have 24,336.29. For liabilities, you have 31,895.98. If you add to that a negative 75,59.69, then you will come out with 24,336.29, which does equal total assets. So the balance sheet is very important to business owners because it shows your financial health. It shows what you own, what you owe, and how much equity is left over. I hope this helps. Join me for more videos. Thanks. Bye.